The trend lines are lines that traders draw on chart as means of connecting a series of prices together where it expected to follow an imaginary path or a trend in one direction. A trader can then use the resulting line to get a good idea of how a particular instrument value might move based on the direction in which the line is drawn. A trend line is a line drawn above or below the highs or lows of a price chart to show the direction in which the price is heading. The trend line is a visual representation of dynamic support and resistance in any time frame by connecting the significant lows in an uptrend and the significant highs in a downtrend. This shows the direction and speed of price movement as well as the patterns that occur during times of price contraction. In many instances, analysts will use different time frames to draw trend lines as they are universally applicable and can be used no matter what the time period or time frame is. Generally, if only 2 points are connected, then it is called a tentative trend line. And if the trend line connects more than 2 points, it is called valid trend line. The more peaks or troughs are connected with the trend line, then the more valid the trend line will be. To draw trend lines like a pro, there are 3 very important keys traders need to know. First, it is always best to start with the higher time frame because they produce more reliable trend lines. Second, in most cases, a trend line will have some overlap from the highs or lows of a candle. But what's more important is to get as many touches as possible without cutting through the candle's body. Third, it is not advisable to force a trend line to fit a chart. If it does not fit the chart, then the line is not valid and therefore it is not worth having it on the chart.